Is there a six?
A six.
A six microphone. Ladies and gentlemen, if I could please ask you to take your seats. We will begin panel 3. The panel is scheduled to finish at 10 past 12, and we will have a networking lunch afterwards. Thank you very much. I will pass them.
Okay, well, good morning. My name is Simon Davies. I'm a principal with Andean Capital Partners Limited, and also with Redirection, a senior advisor with Redirection International Limited. I went to live and work in Brazil back in 1997 and have been intimately connected with the country, both professionally and personally ever since. I'm also importantly the chairman of the Financial Services Committee of the Chamber of Commerce here in the United Kingdom, the Brazilian Chamber of Commerce. And I have with me an esteemed panel of colleagues who are intimately involved in the world of green and sustainable finance. And we are going to talk to you in hopefully a very interactive way. So do think of relevant questions that you may wish to ask. We're going to talk to you about the initiatives that we are engaged in, or we wish to be engaged in furthering the agenda of the financing instruments that are used to support the energy transition in Brazil. So, and without too much further ado from me, I'm going to introduce you very briefly to each of our partners. I will then, each of my colleagues here on the stand, and I will then ask them to give you a brief address about their areas of specialization. And then we're going to start asking people questions. Okay, so I am joined on the right with Pedro Soares from Hartree Capital Partners. Next to me is Greg Brown from Allen & Overy. And I have at my side here, I have Katja Gorbaczyuk, who is from the London Stock Exchange Group. Next to Katja is Alfredo Mordeski, who is from Santander Asset Management. And at the end is Graham Stock from Blue Bay Asset Management, part of the World Bank of Canada. Okay, so as I said, without further ado, I think I will start off by asking you, Pedro, if you will start the proceedings and introduce yourself. Thank you.
Yeah, thank you very much, Simon, and thank you for the invitation. My name is Pedro Soares. My background is on forestry and agriculture. I came from Brazil. Actually, I came from the Amazon. After university, I moved to the Amazon, to Manaus in Brazil, to help to set up and develop NGO, a nonprofit organization. And the idea was to pioneer this new forest and climate space. And we developed the first carbon projects in Brazil, the first RED projects in Brazil. So we have this long journey working on the ground with local communities, small farmers, local governments. And recently I have joined Hartree Partners, which is a commodity trading house. The headquarters in New York. We have an office here in London, and I work for the carbon team. And we operate in the carbon markets in different strategies and angles. And I'll be very happy to explore a bit more about how we can use the carbon markets as a tool to decarbonize not only the energy sector, but also the forest-based sector. Thank you, Simon.
Okay, Greg.
Thank you, Simon, and good morning, everyone. So my name is Greg Brown. I'm a partner with the law firm Allen & Overy. Allen & Overy are a global law firm. We've got a long-standing connection with Brazil and Latin America. We have an office in Brazil, and also the whole area of energy transition and the energy business is one of our particular areas of expertise. In terms of my own background, I'm a debt capital finance lawyer, acting for lenders and borrowers in a number of different areas. But particularly over the last few years, I found myself closely involved in the developments of the sort of green and sustainability-linked loan markets here in the UK and here in Europe and elsewhere. And that's increasingly taken much of my time.
Thank you, Greg. Katia.
Hi, I run the investment funds business at the London Stock Exchange on the capital market side, and I really have the true privilege of running this business, which has become a true conduit of capital at scale into high impact propositions such as energy transition, and I'll tell you more about that. And also at the group level, I am a member of the Group Sustainability Working Group at the London Stock Exchange. And outside the exchange, I'm a member of the Best Practice Committee of the UK Investor Relations Society and a member of the Financial Reporting Council's Stakeholder Insight Group, which shapes the direction of travel for the Corporate Governance Code and the Investor Stewardship Code.
Thank you, Katia.
Hi, my name is Alfredo Mordeschi. I'm the director of Latin American Fixed Income at Santander Asset Management. I've been involved with Latin American capital markets or corporate debt for 25 years. That means I started at 12. And we launched some, we have been involved with ESG funds, and we are also advisors for a Latin American green bond fund sponsored by the European Union and the German government for SMEs in Latin America.
Thank you, Graham.
Thank you, Simon. Good morning, everyone. My name is Graham Stock. I'm a sovereign strategist in RBC BlueBay's emerging markets team. We're fixed income investors, so we buy corporate and sovereign bonds in Brazil, in hard currency and local currency, and in other emerging markets, of course. And for just over 3 years now, also, RBC BlueBay has been co-chair of a collaborative engagement initiative called the Investor Policy Dialogue on Deforestation. And our first engagement under that work stream was with the government of Brazil, bringing to their attention investor concerns around the rising pace of deforestation at the time.
And I'm going to stick with you, Graham, and ask you the first question. We've heard from earlier speakers about the Brazilian government recently launching its sustainable bond framework. What role do you see this initiative playing in Brazil's financing strategy?
Thank you. I think it's a very important signal. So 2 weeks ago now, the National Treasury team came to London to roadshow this new framework and set out the methodology behind it, their hopes and aspirations for it. And I think there's a couple of things worth highlighting. First of all, it is a very good framework. They've been able to learn from the experience of other countries in this field, Mexico, Chile, Colombia, Uruguay. So they devised a framework that is robust. It's been externally verified. Going forward, the reporting on the framework, the reporting on the bonds that they issue under it will be very transparent, which is important, and again, externally verified. I think it's important to note that it's not going to be a huge source of funding for the government, simply because most of the Brazilian government's funding is done in local currency, in the local real market. But it will be an important benchmark for corporates that want to issue sustainable or ESG labeled bonds in hard currency. And I think it's an important signal also because it would have been difficult to do just a year or two ago. National Treasury have been talking to us for a couple of years about this framework. We knew it was under development, but at the time that they first started talking about it, most investors, if they thought about ESG in Brazil, thought about the problems, not the opportunities, and in particular, deforestation. So I think now the stars are more aligned for success in that framework, and I think we will see the first sustainability bond coming out of Brazil probably in the next 2 or 3 months. And this is the 6th edition of the Green Finance Brazil conference here at the embassy. Maybe some of us could get loyalty cards with their attendances marked. We get extra pound de queijo for being frequent attenders. But it is striking that the messaging is much more consistent this time around than it has been in the past, in that the different levels of government are pulling in the same direction. And again, that makes coming to market with a sustainable bond much more feasible. It means the headlines are about the opportunities, not the risks.
Thanks, Graham. Katia, what's the role of the exchange, of an exchange, and particularly the London Stock Exchange, in accelerating the energy transition?
We've heard so much about how much capital needs to be galvanized from around the world in order to underpin Brazil's energy transition, and that creates responsibilities for all participants in the finance ecosystem. So what does it mean for us as a London Stock Exchange? So we see ourselves not just as a listing venue, but we see our role to be a true enabler of sustainable growth. And that means, of course, supporting the growth of the green economy, but also supporting an economy that creates jobs, fosters innovations, and also enables broader investor access to the unique opportunities that this drive creates. So that this is what drives our innovation behind all the platforms and products that we offer as part of our capital markets, starting with the equities business, which is our traditional business, dating back to 300 years ago. Some of the oldest issuers we have with us still listed are 150 years old, and that just demonstrates how much we stay aligned on their growth journeys. As an equities listing business, we remain to be the most international exchange in the world, with close to half of our companies coming from overseas and investors coming from overseas as well. And why is that important? It's important because we have investors who understand and appreciate the risks and opportunities in international jurisdictions and are there to stay and contribute to the company's long-term growth journey and deploy the power of their stewardship activities to drive fundamental improvements. So that's in a nutshell on the equity side. On the fixed income side, we have one of the oldest sustainable bond markets, and we were the first exchange globally to launch a dedicated transition bond segment, which is so important for enabling the transition of critical sectors of the economy to enable a greener future. And then the market that I have the privilege of running is the closed-ended fund market, which has become known as a conduit of capital at scale into energy transition, among other important sectors such as infrastructure and innovation. So in a nutshell, a closed-ended fund is quite different from an open-ended fund. It raises capital at IPO, it scales through issuing further shares, and investors, if they want to exit, they sell shares on the exchange. They don't redeem against the vehicle. And why is that important? Because it enables a listed fund to invest in illiquid and alternative underlying assets. And that's why the London Stock Exchange has been the #1 exchange in the world for this type of vehicles. We have grown the market to over 400 of these funds with total assets managed of $300 billion. And we are the only regulatory framework that enables investment in illiquid underlying assets. So as part of our energy transition offering, we have strategies that give investors exposure to renewable energy infrastructure, to energy storage, energy efficiency, and then other innovations such as green hydrogen. And what opportunities does this represent for Brazil, both on the asset management side? If you're an asset manager with an established track record and with a unique differentiated proposed investment strategy, you can raise capital on the London Stock Exchange. You can establish Brazil as a jurisdiction to be invested through the international framework of the London Stock Exchange, and you can enable broader investor access, international investors, to contribute to this enormous growth opportunities. So that's how we enable the deployment of capital at scale into energy transition. There are currently strategies that give exposure to a global portfolio of assets in energy transition in Europe, UK, the US, but there is currently no strategy that gives investors exposure to South America and Brazil in particular. So this is an enormous opportunity that we would like to bring to your attention.
Am I correct that the longest continually listed company in the London Stock Exchange is a South American company?
Well, it's a mining company, a little mining company known as Rio Tinto, which started 150 years ago, and we just celebrated its anniversary. And it started as a pre-revenue business. So we like to call ourselves as a 300-year-old fintech, because we continue to innovate to enable, to basically meet the needs of the economies, meet the needs of the stakeholders. And if there is an area of need where capital needs to be deployed, such as, for example, the voluntary carbon market, we have an innovation that was launched last year to channel capital at scale into the carbon markets and add the necessary layer of transparency and oversight to what used to be an illiquid and untransparent market.
Great. We will come back to the voluntary carbon market because that is an area of great interest. But let me involve Greg. Greg, you've seen the development of the green and sustainable finance market in Europe. Are there lessons for Brazilian borrowers and lenders from that market?
Yes, absolutely. So, I mean, one of the themes today has been about the importance of attracting private capital to this area, which is obviously key. And the sustainable finance market is a way of doing that in the sense that you can make particular investments more attractive to particular investors by structuring them as green or sustainability linked investments. Now, in Europe, what we've seen over the last few years is a huge growth in these areas. So the green bond market is relatively mature, but we've since seen sort of the green loan market develop. And then probably a little bit more recently, the sustainability linked loan market, which really saw explosive growth over the last 4 to 5 years. And that growth has been great. It's reflected a lot of enthusiasm for what these things are trying to achieve. But that enthusiasm has come with a number of sort of lessons learned along the way. And therefore, I think the opportunity for Brazil and other markets looking to tap into these sectors is really to learn, you know, and not make the same mistakes that have occasionally been made here and elsewhere around these products. So I think now it's the case that there is an established understanding of what these sort of investments need to look like, what needs to be avoided. And I think, you know, for issuers and borrowers, going in with an understanding of what you need to do is sort of key in terms of the quality of the data and the reporting that you need to underpin that. That's fundamental. The willingness to involve sort of a third-party reviewer or, you know, some sort of external verification to lend credibility, that's now sort of regarded as pretty key in these things. So I think the opportunity for Brazil is really to avoid some of those mistakes. And, you know, clearly the potential, it's been discussed already today, the potential for Brazilian issuers and borrowers in the sector is huge. So I think the challenge for them is to make sure that they sort of take a sort of best-in-class approach to make themselves sort of that extra bit attractive to this particular area.
Great, thank you. I would like to ask all our panelists as well, if you have anything to contribute on individual questions, even if they weren't directed to you, please do chip in. But I'm going to involve Alfredo now. And following on from what Greg was saying about some of the risks and the opportunities, greenwashing is a big risk for investors. How, in your experience, Alfredo, can financial engineering prevent greenwashing, and how can we better design better instruments that protect investors?
Yes, I think greenwashing is a big issue and is a big fear on the part of investors. We had the example of the DWS, and we had others, and nobody wants to be exposed to this sort of risk. I think the greenwashing start from the lack of ambition on the design. Sometimes we need to, I think there were many mistakes and many sins that were made on the designing of some financing vehicles. As you know, the market for green sustainable finance, it started with the use of proceeds approach. So we saw the green bonds, the sustainable bonds, the social. We are seeing blue bonds as part of the green finance network. And then we evolved towards the sustainable linked bond approach, which is, it sounds very similar, but it's very different. It was a big opportunity for bankers because issuers love it, because they didn't need to show the use of proceeds. So they could use it to refinance, they could use it to green projects, to brown projects, to dark projects. Use of proceeds is completely free. Now, why were green aligned investors moved into this kind of vehicle? Because it has sustainable targets in terms of KPIs that the company needs to pursue. So when the instrument is not bad per se, if these targets are very ambitious, it could be very, very valuable for sustainable investors. It could even be much better than the use of proceeds. So but we need to have ambition KPIs, and this was not always the case. We need to design, for instance, if there are observations to see if the company performed according to the targets, these observations cannot be towards the end of the vehicle, because we've been like 4 or 5 years not being compliant with what the company said, and we only are observing this at the very end. We cannot put calls for the issuer, because the issuer can walk away with not being compliant for years without any sort of penalty. We cannot put 25 basis points of penalties when the Federal Reserve just raised 500 basis points in 1.5 years, because this penalty is completely meaningless. We need to put the power in the hands of the investor again. So it's not a call for the issuer, it's a put on the hands of the investor that if the company was not compliant, promised something that was not able to deliver, then the investor can walk away without a loss. That means give back the bond to the hands of the issuer. So financial engineer can do a lot. It just has to sit on the side of investors and not that much on the side of the business of issuing, which is understandable, but it's our responsibility to try to put that fight.
Can I just come in there? So Alfredo makes an important point in the distinction between use of proceeds bonds and sustainability linked bonds. And it's worth highlighting that the framework that Brazil has presented in the last couple of weeks, at least initially, is for use of proceeds bonds. So I think they're going to call it probably a sustainable bond, meaning that they can allocate funds in the budget under those use of proceeds for green or social projects, but it won't be, the return on the bonds won't be tied to performance against indicators. Maybe in the future, there's an opportunity for progress on decarbonization or tackling deforestation or other targets to be incorporated, but for now it'll be a use of proceeds bond.
Thank you very much. I'm going to go on to Pedro. Following on from Graham's comments there, the roles of government and the private sector in leveraging a new forest-based economy in Brazil.
Yeah, thank you, Simon. And I think there's a very good opportunity. When we speak about green finance, I think that we have to speak about carbon markets as one of the tools that we have to attract private sector investments to forest-based activities, for example. And for me, the carbon markets is one of the most exciting markets that we have ahead of us. I think that when we speak about carbon markets, most people think about the voluntary piece of the market only, which today represent just a little or just a fraction of that market. We have the voluntary carbon markets represent, it's like a 2 billion markets worldwide. So it's not that representative. It's going under great scrutiny, partially because of the greenwashing issue, partially because of the accounting rules and methodologies that got out of date. And I think that the scrutiny is very welcome and we have to embrace that. And if the outcome of all of that scrutiny, I think everyone is following the Guardian articles and everything that has been said about the quality of projects and the quality of credits. If the outcome of that is reformulate the rules and create a new platform where corporates have more confidence, where we have greater accountability, if that's the outcome, then that's a very positive outcome. But if the outcome is to move corporates away and they understand that they would be better off retracting from their targets, even that a voluntary target, then the outcome is very bad. So I really think that we have to push to better rules, a more safer platform under the voluntary space for corporates to operate. In Brazil, it has been, the voluntary carbon markets has been operating in Brazil for what, over a decade now. And we have real projects, we have experience, but I think that the opportunity ahead is not only on voluntary, but also on what the Paris Agreement has created, where each country in the world will be either long or short in carbon. And this will become like a real trade opportunity for both sides, for supply side, for example, in Brazil, and demand side. So we are in this process where we are seeing countries to create their own regulations around the carbon markets. Brazil is an example, creating a kind of emission trading scheme. But we're seeing other countries such as Indonesia, Ghana, creating their specific regulations for allowing them to participate on the Paris Agreement under this new framework under the Article 6, Article 6.4. And this can really create an opportunity in Brazil, considering the greenhouse gas emissions profile, where 75% of the emission came from land use change, basically deforestation and ranching livestock. This can be a great opportunity. Even I think that we have now some alignment between the governmental approach to that issue, and it looks like we have a real commitment on reducing deforestation, and this should become an asset, and Brazil should be able to trade that asset and monetize that. And I think it's very important to have institutions such as the central bank in Brazil that is represented here, because for a country to participate in this new global market, the country will have to export 1 ton, which will generate a cost to the country. Even that it can attract a revenue, we need like central bank and treasury on board of that agenda to leverage private investment and reinvest that income in a strategic way, allowing the country to meet its targets, meet its NDC, and generate surplus to the local economy.
Thanks, Pedro. Graham, you were talking about the new structure of the sustainable bonds that Brazil is issuing. Can you elaborate a bit on essentially how you feel Brazil compares now to other sustainable finance markets?
Well, as I said, they've come a little later to the party for good reason. One, to make sure they got the process right, and I think they can learn from the experience of other countries. And secondly, again, because I think there would have been accusations of greenwashing if Brazil had tried to issue an ESG labeled bond at a time when particularly progress on combating deforestation was going in the wrong way. But again, the framework is very robust. So before they issue this new labeled bond, the Sustainable Finance Committee, which is a cross-ministerial committee within government, will publish exactly the budget line items that are going to be allocated to from the use of proceeds. And that could well include the climate fund, as the gentleman from BNDES said earlier. It'll certainly include deforestation. It was heartening to see in João Paulo Resendi's presentation that they recognize that 40% of the emissions in Brazil come from land use change and deforestation, with the next 30% coming from agriculture itself. So there's clearly a lot of scope for progress in that field. And again, when he was talking about the budget allocation, the first item on the agenda there was tackling deforestation. So with my investor policy dialogue on deforestation hat on, clearly we welcome that. And we've been making the case to the government, as I say, for 3 years now, not just the Brazilian government, we have work streams on Indonesia and consumer countries as well, making the case that it's a fiduciary responsibility for us as asset managers to raise these issues and highlight the concerns we have about the outlook for growth and therefore yields if Brazil doesn't tackle this problem.
Great. And Pedro, does this provide challenges, opportunities for Brazil to participate in or to expand their participation in the carbon markets?
Yeah, absolutely. I mean, to participate in the carbon markets, first of all, the country needs to have results. And results in Brazil means reducing deforestation and creating a new agricultural shift in the country. So it's quite different when we assess like the top 5 emitters in the world. The top 4, which is basically China, US, India, their emission is based on energy and industry. In Brazil, the emissions in the country is land use, deforestation, agriculture. So this is the main challenge and opportunity. So if Brazil manages to really generate a result, what we have done in the past. So if you take like the last decade, between 2004, 2005 up to 2012, Brazil reduced 80% of the deforestation in the Amazon. And that was the right time for Brazil to issue a green bond. For example, the results were there. That's when the Amazon Fund, I'm not sure if the colleague from BNDES is here, but the Amazon Fund was created in 2009 when Brazil was really demonstrating that the country could generate at scale results, reducing emissions. And by at scale, I mean Brazil reduced 80% of deforestation, which basically saved something around 4 billion tons of CO2 to be released to the atmosphere. This is like 10 times UK emissions. So it was a very impressive result. And Brazil showcased that we know how to do that. We know how to reduce deforestation. It has to be an integrated framework going from monitoring, fiscalization, command and control, law enforcement. The central bank played a very important role at that time by limiting the rural loans to those municipalities with higher rates of deforestation. We also had at that time like macroeconomic factors going on. The Brazilian currency, the Brazilian reais, was appreciating in the market, which make exports a little less profitable. So the incentive for deforestation was a bit lower. So it was a perfect storm at that time that allowed Brazil to reduce deforestation. And if we don't do that, I don't think that we have the asset to participate in the carbon market.
Cool. Well, given that it's obviously a very exciting phase for Brazil, I'm going to ask you, Katia, how should Brazilian companies maximize the opportunities to access high quality investors?
It's an excellent question, but I think that we first have to define what high quality investors and high quality capital really is. And it's not necessarily capital at scale at the lowest possible cost, but it's more importantly so that it's capital that is aligned with the aspirations of a company, of a sector, of the economy for the next 10, 20 to 30 years, and will deploy the power of their resources to drive the fundamental transformation of whichever company they're investing in. So as with any relationship, it's a two-way street. The investor relations imposes expectations on the one side on the company and on the other side on the investor. So in terms of the company, sustainable finance is becoming mainstream. So what that means is that investment managers are incorporating sustainability considerations into their core investment decision making. And that places certain expectations on the company. Firstly, it's of course on the disclosure, and we have seen more or less universal uptake of the opportunity to report under TCFD, which gives companies opportunity to report under a more or less universal, globally recognized framework. But now TCFD has evolved into the new standards that's just been rolled out, the ISSB standards, and that gives a more holistic look at sustainability beyond just climate, but all the factors that go into this determining the future success of failure of a company. So rather than seeing ISSB as a burden, it should be seen as an opportunity it presents for the companies to report under a globally recognized framework in order to access the capital that they need. So, and transition plans, by the way, will be very much an integral part of the ISSB standards. But then it also places certain expectations on the standard of communications and engagement of companies with investors. And because I'm part of the best practice committee of the IR Society, we shape a bit of a direction of travel of what constitutes best practice in order to help for companies to procure the long-term capital that they need. And in a nutshell, if I have to summarize where investors' communications are evolving, there are 5 key building blocks. One is the extent to which the company engages with its stakeholders, and the output of that stakeholder engagement and consideration forms or contributes to shaping the business objectives. 2, it's a transparency of how integrated sustainability work streams are across the organizations and not just in silos, and really contribute to the formulation of strategy and vision of a company. The third area is how progress on sustainability agenda is evaluated on a continuous basis, and whether investors and companies are communicating on any lessons learned, because that, since frank discussions on the obstacles faced and the lessons learned is what goes a long way to fortifying the essential trust between companies and investors. The fourth important area is how effective your board is as a decision maker. And what makes it effective is, first of all, being a well-informed board, the outputs of that stakeholder engagement being delivered to the board on a timely manner, and then the board having the necessary level of expertise to engage in a constructive challenge and then shape its decisions that are not made in silo, and this decision being tracked by, on an ongoing basis of how well they're implemented. And then the last important area is how well and how robustly investor feedback gets considered by the companies, and whether the company is engaging not just with investors it currently has, but the investors which it currently aspires to have. So that's on the company side. And very briefly on the investor side, it places the expectations and the responsibility to deploy the full power of the stewardship resources in a transparent way. So being transparent about how decisions are arrived at and giving companies enough room to remediate any concerns, but also engaging beyond the individual company, but engaging across the sectors to drive sector-wide solutions, engaging with regulators, engaging with governance, to really stimulate incentives to arrive at the common objective. And so if there is a success in the exercise of the investor relations, it's how much high quality and responsible capital gets behind what you are set out to achieve.
Thank you, Katia. We're firmly in the realms now of ESG strategy and ESG financing. And I'd ask Greg, could you comment on how Brazil can address some of the ongoing issues that have affected ESG financing initiatives in the past?
Well, I think this goes back to the point really around avoiding or minimizing concerns about greenwashing. And I think that's an area where lessons have been learned over the last few years. And the distinction was made, and it's an important distinction between kind of the use of proceeds or green loans and bonds and sustainability linked instruments. And it is the latter where I have to say, I think there's more danger or more inherent risk around greenwashing. And greenwashing, it's a label that's used, and it kind of, sometimes it's unhelpful because it kind of suggests a degree of sort of slightly cynical, an attempt to mislead people. Whereas actually, I think what it normally boils down to is sort of misplaced enthusiasm about how a particular product is labeled or marketed or publicized. And I think really banks and financial institutions have frankly woken up to the fact that you can't get away with sort of saying any old rubbish about a product. It's got to be underpinned by genuine, credible protections and credible data. And I think what we now see is firstly, that data, that the quality of those targets, the quality of the reporting gets much more focused, quite rightly, than perhaps it once did. So that's the fundamental protection. The fact that the people putting these instruments together take it seriously enough to make sure it has that credibility. But also, I think we're seeing in some deals that there are more protections really for investors to perhaps challenge the data, challenge the reporting, perhaps to kind of reset the targets in certain situations. So I think you're seeing built into the structures more protections. And fundamentally, I think that is all a good thing. It reflects a slightly more mature market or mature approach to the products, which, while making it a bit more hard work to implement, a bit more hard work to put in place, it does have that kind of credibility and a bit more rigor around how it's implemented, which, as I say, I think, at times in the past hasn't always been there.
Right, Graham.
Thank you. I just wanted to highlight one quite important non-ESG obstacle to getting green finance to flow to Brazil, and that's simply the fact that Brazil is BB rated. So Brazil used to be investment grade, hasn't been for several years now, and that the investment universe is very segmented. So investors like to know exactly what kind of risk they're taking, whether they're investing in investment grade or sub-investment grade, whether it's developed markets or emerging markets, and then of course what sector or company that they're investing in. But not being investment grade and being an emerging market makes the flow of capital more difficult. So efforts at the government level to bring down the budget deficit, bring down the debt to GDP ratio and recover investment grade would also go a long way, I think, to facilitating that flow.
Great. Okay, Alfredo.
I want to add one thing. I mean, a bit of a failure on the part of the sustainable bond market is that we are not seeing a very strong greenium. I mean, a very, very visible difference in the cost of funding of a bond that is sustainable compared to a bond that is just a vanilla bond. We have seen two examples in Brazil of two companies that even refinance maturing sustainable bonds with non-sustainable bonds, which also speaks loads about our failure as investors in order to, I mean, push these companies into I mean, approach and keep this engagement with sustainable finance. So I think that, of course, we have been about, I mean, the last 2 years have been a mess in terms of interest rates, but it's a good opportunity to try to reflect on our aim of the sustainable bond market to really put a difference between the cost of financing a sustainable project against a not sustainable project.
Cool, thank you. I'm going to open the questions up to the floor, but whilst you're thinking of your questions, I've got one question that I'm going to ask anybody on the panel, whoever wish to respond. Government and sovereign debt has traditionally provided large tranches of sustainable financing, and we've already seen the BNDES here and a very active role in sustainable finance projects. Can we expect to see private sector involvement, in your opinions, in the Brazilian sustainable financing sector increase, and by how much do you think it should increase or would increase? Who would like to answer that one? Thank you, Graham.
It's only to say that it's an impossible question to answer. I mean, the magnitude of the flows is potentially unlimited, but at the same time, as I say, with the segmentation in the market, a lot of things need to happen for that finance to start to flow. So I think there's a key role for blended finance here. So multilaterals and indeed BNDES, de-risking some of the projects that need to be financed, just so that you're not layering one risk on top of another. So we've seen successful financing in Ecuador, for example, of social housing, with the IDB taking some of the political risk. Some of the debt for nature swaps that have taken place in the last few years have had the political risk taken out by the Development Finance Corporation in the US or the IDB again. So I think that blended risk is a way of sort of planting the seeds, and then the private sector can take over once the benefits have been demonstrated.
Great. I like that answer a lot, actually, the blended risk. Thank you, Graham. Katja?
I would add that actually our closed-ended funds have a track record of being the vehicles for blended finance, because we've had precedents when an IPO that invests into a high impact sector of an economy is seeded by sovereign capital. And that in itself attracts further private sector investors into this vehicle and allows it to grow. Sometimes it quadruples in size over the following, say, 1 to 2 years, because it establishes a track record with private investors and then enables itself to raise further capital by issuing further shares.
Great. Okay. Thank you very much, Katja. Right. Questions. We've got a few minutes left.
A couple of questions for the panel. This has already been touched on, but do you agree with more complete regulation of the voluntary carbon markets? And also, how do you balance between providing solutions with integrity, but also not stifling or affecting growth? Thank you.
Yeah, thank you. I don't think there's any way around regulating. I think that the voluntary carbon markets is good and is welcome, but to scale this up and to really bring quality and scalable finance to the country, we will need to have a proper framework and regulation, which means that the voluntary carbon markets may still exist and will still exist, maybe on a different price level and different scale, but I don't think any way around. I think that the countries are already creating their initial regulatory process in order to try to collaborate, create bilateral agreements, participate on this global framework. So we need to do those two things. So go through that scrutiny process in the voluntary carbon markets, and came out of that process with much better rules, better transparency, accountability. But this will not be this scalable market, or the market at the scale that we wanted this to be. So the regulation would be, it's already coming. So I think it's a natural process.
Gotcha.
So from the exchanges perspective, the problems that we saw in the voluntary carbon markets are what everybody recognizes. It's a scale, liquidity, and the transparency. So from our perspective, the way to solve it is transparency through disclosure. And that's why we have deployed the power of our well-established regulatory framework to enable the listing of vehicles that will deploy the capital into climate change mitigation projects, nature-based solutions, and technologies, and will be able to distribute carbon credits as dividends to the investors. Because the two problems we've tried to solve is, first of all, access to capital for climate change mitigation projects. And there was certainly no access to international capital markets for these projects before this innovation, but also access for large investors and the opportunity to channel capital at large amounts into what used to be a very thinly traded market. So I think that the potential of deploying a voluntary carbon market of the exchange is unlocking the flow of international investor capital, both corporate capital and institutional capital, impact-aligned capital, into the area, which represents a great opportunity for corporates in meeting their net zero targets, and hence a greener future for us all.
Yes.
Yes, if you allow me, it's not a question, it's more an information, maybe to help Graham to answer your question about the private sector appetite for investments. So Katja has just mentioned also about the importance of transparency, and Pedro about the role of the central bank as a regulator. So we have put a lot of efforts on trying to regulate in terms of demanding disclosure of the financial institutions. And we have been working together with the Ministry of Finance for a sustainable taxonomy. So it was just put in under a public consultation last week, the sustainable finance, sustainable taxonomy, which includes many sectors, including agriculture, forestry, and we have a very ambitious time frame. So the idea is to start working, was the roadmap. So now we will start working on the taxonomy in January, and we expect to be able to have it ready by the end of next year. So this is an important information.
That's great news as well. And given the central bank's recent successes with open banking, and especially with PIX, I'm sure that you will deliver on it. Thank you.
Hi, Gustavo Braga, advisor on international investment in Brazil in the energy and green energy sectors. My question, possibly more to Greg, Alfredo, and Graham, following up on Simon's point about international best practices benchmark, and also Alfredo's point on differentiating the cost of green investment really effectively. Could you share some best practices, some experiences internationally that you have came across coming from governmental stakeholders, which initiatives did motivate investors to that kind of green finance? Things like sovereign backing and collateral, or reduced to income tax, withholding income tax rates, or double enhanced deduction of corporate income tax for that kind of interest, specifically green finance interest. Would you have any ideas that you can share on those kinds of initiatives?
So my focus is more on sovereigns than corporates. Instinctively, I'd be wary of playing around with tax rates. I think it's better to create a level playing field and approach it that way. But where we've seen best practice and where we have seen a greenium, if you like, emerging over time was in Uruguay. So where they first issued a labeled bond, and then were they were the second to issue a sustainability linked bond. And they've subsequently done liability management exercises where they've withdrawn some of their old vanilla bonds and replaced them with more of the labeled issuance. So they're making a very strong statement that the climate and nature are at the heart of their debt management strategy. It's across government commitment. It goes well beyond the time frame of this current administration. So it's a national commitment. And because it's a sustainability linked bond, you can see the costs and benefits. So Uruguay's sovereign bond is unique in that if they exceed their targets, the coupon steps down. So as investors, we get paid less, but we're sharing in the positive news for the planet. And if they miss their targets, we get paid more because we're being compensated for their failure to make progress. And it's a divisive issue in the industry. Some people think that we shouldn't be committing funds in that way, at risk of losing coupons. But we think that the alignment trumps that, and it sets a very strong example for the industry and for businesses within Uruguay as well.
I want to add, because you were mentioning, I don't know if best practices, but of course, if you take Europe landscape of sustainable finance, you see a lot of players coming from the authorities, the European authorities, with a very clear set of guidelines, the taxonomy that was the first to come, and which is discussable. It's I'm not saying that it's the best of the world, but it was a very wide framework with a lot of very important stakeholders where the funding was available, the regulation was available. And so it really aligned the players, particular banks and asset managers. If we go to the region, if we go to Latin America, what do we see? There is good news and bad news there. The bad news is that governments change, and sometimes they can influence that this thing is more important or less important. The good news is that there are some institutions that have been there pushing in the same direction for a long time. We mentioned the central bank, we mentioned BNDES, some multilaterals, IDB, IFC, were in the region with this message, being very, very consistent, providing their own, working on the taxonomies, etc. What are we lacking? I think we are lacking regulation that tackles the pension funds and the insurance industry, which are very important stakeholders in Europe. So if you ask me what are, the parts of the puzzle that you will miss when you look at Latin America, I wouldn't say the governments, we work with that, but regulation in terms of the big institutional investors, pension funds and insurance companies are the ones I will choose.
Okay, I'm afraid that we have one last question at the back, and then I think we're going to have to wrap it up because we're already 7 minutes overdue, and I'm sure that you're all itching to have some lunch.
Thank you. No, program, you mentioned Brazil having a very strong framework coming out. But on the other hand, W bond and W sustainability bond and the fact that it's non-investment grade. How do you expect them to interact with investors in the next 2 or 3 months? What do you expect them to do? More deal, non-deal roadshows? What would be a good way to come to the market in the next few months?
A very good question. So they've roadshowed the framework, which was what they call a non-deal roadshow. You could tell from the fact that the representative from the National Treasury wouldn't answer the question about how much money was going to go to the climate fund, that they're not far away from making a decision on that and just can't tell us yet. And I don't think they'll need to do another roadshow because the framework is very clear, it's very transparent, all the documents are available on the government's website. What they have said they will do is publish precisely the use of proceeds. So how much is going, they've talked about doing a benchmark size bond, so that's maybe $1 billion, probably 10 years, because that's a benchmark tenor, and that helps corporates to price off that in the future. And then they will publish, how much of that $1 billion or whatever it is going to deforestation, how much of it is going to Bolsa Familia or whatever the social programs are. And then they'll come and price. But I think it will go well because Brazil is not a very frequent issuer. But when I say it'll go well, I mean it'll price close to the existing Brazilian bonds, which are 250 basis points over US Treasuries. If they were investment grade, that would be 150 basis points or even 100 basis points. So that's why I say that addressing the sort of macro fundamentals is as important as getting the ESG components right.
Okay, it's an interesting subject, and I think there's I know there are a few more questions, and I'm fairly sure that we will have a follow-up event in order to carry on with more insights into this fascinating and growing world of green and sustainable finance. But wrapping up, I would like to say thank you very much to the Brazilian Embassy. I would like to say thank you very much to the new ambassador and good luck in his new assignment. And Senor Roberto, if you could pass on those sentiments, thank you very much. And also to Nicola, thank you very much for your help. Well, in actual fact, my help in allowing me to assist you in organizing this event. That's very kind. So thank you very much. I would also like to thank the panelists who have joined me today for your excellent insights. And I'm truly impressed by your level of knowledge. And I hope that we can continue to interact together in the future. And of course, to all of you for being here and attending and listening to our questions and the subject matter. We're all very passionate about Brazil and its future and the growth opportunities in the market. And the only thing left is for us to wrap up this event and to have some lunch. So thank you all very much. Thank you.